Porinju Veliyath is joining us right now, Managing Director and Portfolio Manager, Equity Intelligence on a Skype link from Kochi. Porinju, good morning. It's always a pleasure to welcome you here on the channel, on the show. Thanks very much.
Good morning. Good morning.
We last spoke on the 4th of September, Porinju. The Nifty was, I think, at about 7650 or so. We're at about 8150 now, about 6% higher than that level. You were telling me then that don't worry too much about what's happening globally and things will settle down. But you did say an important thing, no more casual buying, right? The casual phase of throwing money at something and watching it go up and make money, that is over. You were saying that now this is a stock picker's market and you got to be careful about what you buy. Let's just pick it up from that point where we left off, Porinju. How do you see things now?
I am seeing India and the opportunities in India as good as during our last interview 1 month ago. Nothing has changed. Only the perception has changed. People give unnecessary importance to the many global developments, and Indian investors have nothing to do with those things. Like the Chinese slowdown or the yuan decline, or the global slowdown, or the potential rate hike in US. I would say these are just beautiful things to ignore totally. And for value picking in India. See, those things are important for media and the economists to discuss and write books and articles. It has no much relevance in stock picking. Of course, in the background, on fundamentals, we have to be aware about all these things. And all these things, at any given point of time, globally, there are issues, there are crises, there are challenges, there are excitements. It is always there, nothing new in this market or in this in 2015 as it is. That's what I have been trying to tell. See, people are, these are very now Chinese slowdown. Why don't investors look at opportunities in India? Now maybe India today is in such a position it can replace some of that vacuum created by the Chinese slowdown or slower growth. So India is coming forward. This is what I have been always talking in the last 2-3 months, and I'm very confident about that.
Okay. Let's get the business of forecasting prices out of the way at the beginning of the interview, Porinju, and then we can move forward to more meaningful things. So if I were to ask you to make a forecast, would you say a new high possible by the end of the year? If you say that, it'll be completely non-consensus. But that's what you like to do, right?
Forecasting, see, the Nifty. In fact, I have nothing to do with the equity market or Nifty. I'm a stock picker, and but at the same time, generally people understand the language of Nifty when you try to forecast generally the general sentiment in the market. So that way I find, if somebody asking me to predict about the Nifty, I find Nifty as at 10,000 as the bottom very soon. Because last time you asked me whether it will go down to 7,200 or below 7,000. Some people have been talking about 6,200. I don't know. But I am seeing 10,000 for Nifty as bottom, which will be established very soon.
Okay, 10,000 on the Nifty very soon. How soon is very soon, Porinju?
It may take 3, 4, 5, 6 months, depending on how people become rational. All depends on the rationality. Today people are not that rational. They are giving importance to insignificant things, and they exit equities. A lot of selling by the hedge fund managers across the globe in emerging markets. India also is affected. So, and when locally, domestically, actually Indians are the most bearish people on India. That's the biggest problem, When they see some FIAs and some irrational FIAs or somebody because of the compulsory forces, they sell some stocks in India, say 5,000, 10,000 crores selling by FIAs. Indians feel, oh my God, this is end of the world for equities in India. We are finished. FIs are holding so much stocks, lakhs of crores worth stocks. They're holding so much percentage of Nifty stocks. So if they do selling like this, we are finished. Indian economy is finished. That's what many people think. I would say it is totally irrational. In fact, I feel, the domestic potential funds, that is tremendous. That's very powerful. I had once tweeted, if FIs want to exit India, all of them, it will take only 2 days, 48 hours for Indians to absorb it, provided they understand the value of it and they recognize the value, and and they do act rationally. So Indian domestically, Prashant, one very sad thing. We all know a lot of smart people are making huge wealth, creating huge wealth by investing in equities, by value investing or whatever. How many people in India enjoys this? And we have such a beautiful taxation regime, almost tax-free income from equities. If you hold it for 1 year and sell it, there is no tax. This is not a small thing. And a very minuscule of Indians are understanding this, and they're taking advantage of that. I'm very sad about that. Actually, equity has a potential even to go to the middle class, lower middle class, and even below that. Even people with 10,000 rupees can take advantage of equity investing, rather than putting their money in some fraud products, some fixed deposits, something like that. A lot of people are there in the villages in India. I know the fact in Kerala. There are unscrupulous, operators. I mean, financiers kind of people. They collect 10 crores, 50 crores, 100 crores and disappear. The poor people give all their money to them. They talk, they promise 100% appreciation kind of things. So that's very bad. Of course, SEBI and RBI has taken many steps to stop such kind of unscrupulous operators. Anyway, I think we are going out of the subject, Prashant. You have to bring me back.
No, I mean, I think you were making all relevant points. Anyway, let's just, okay, fair enough. Since you want me to pull you back, let me do that. So you tweeted yesterday. You said 8K miles up 1500%. NIIT, which is a large percentage of your total funds in the PMS, that is done very, very well. I mean, I think we spoke about it at about 45 rupees or so. From there, it's done very well. Arvind Infrastructure, you said, is up 180% in 3 weeks or so. I'll come to NIIT in a bit, but let's just get this 8K mile up out of the way. But did you buy it in your fund? Because you mentioned this once earlier as well, that you said it's a futuristic industry worth exploring, looks interesting. Did you buy it, or it was just an observation?
Prashant, this is basically this Twitter account I opened it to help some people who cannot invest 25 lakhs in our portfolio management. So this kind of small ideas, sometimes, we are taking a chance. 8K miles, I bought personally at around 100 rupees, and I tweeted that day at 110 rupees, the tweet is still there. So basically, I was trying to help out in sometimes this kind of picks, you have to take a chance. It's not a sure, foolproof kind of value investing. But sometimes such kind of ideas, when you buy, but with the limited exposure, when you buy 5-6 stocks, some of them can really go up, create big difference, make big difference to your portfolio. Now, I am not holding. I bought and I sold it at around 500, 600 rupees. But I tweeted, a lot of my followers are holding it, I believe. They used to message me. So the stock has gone from 100 to 1,800 yesterday. So I just tweeted, maybe to take credit. But otherwise, there is nothing much about it. I don't recommend this stock at this kind of levels. NIIT is a core idea. We hold 4% of the company in our portfolio management. As you know, we bought it at, I started buying at 45, then all the way down to 35 I had to buy because everybody was bearish on this stock. Whereas at that price, around $100 million market cap, zero debt company, clean balance sheet and, great promoters and great brand, one of the biggest brands in the world in the education business. And I find the company was at an inflection, which I tweeted also at 33, 34 rupees. And I find NIIT, if you have patience and conviction, this stock has potential to be a billion-dollar market cap company. So, because that is the way this company is moving, and it's a futuristic business. So once, if you remember in our interview, I told, if NIIT was not a listed company, maybe private equities would have invested in this company at 10 times the market price today. So the only problem with NIIT that it was a listed company. Now things are changing. Now the stock will go up, lot more people will come and buy perhaps. They will be exporting more. The biggest problem in India, when a stock goes down or when the market goes down or it's in a declining trend for whatever short-term reasons, people feel, oh, this is all gone. Don't want to look at the company or the market. And in some excitement, for some short-term triggers, it moves up by some 100, 200 points. Then everybody wants to jump into the bandwagon. The volatility is very high, and that is the swing of sentiment, perception. It is unprecedented. I haven't seen such kind of irrational short-term moves in my over 2 decades of experience.
Arvind Infra, which do you own that? Do you hold that, or that was also a it's just an observation?
Arvind Infra, I bought it personally. I think my name came, my son's name came in the bulk deal. It's a small market cap company. See, again, why I tweeted, not about a stock idea. I was trying to give the idea how to pick stocks. Sometimes it is like an example. Now, Arvind Infra, it came as demerged from the Arvind Industries. And when I bought it 3 weeks back, it was 65, 70 crores market capitalization. There is no big debt burden or, there's no legacy kind of issues. A clean company with an Arvind brand name. They have got some land bank and they have been doing some development successfully and making profits. And Arvind, I think the group has, land bank across the state, especially in Ahmedabad, in a big way. So this is like a mini Godrej Properties, I felt. And Godrej Property, I am still bullish on the stock. It was at 6,000 crores and this was at 60 crores. So now it's, so sometimes, you get great businesses and brand and business model at throwaway price in this country because of the people are not looking at such illiquid stocks or smaller companies. Especially the big funds never look at this stock. They can't practically do it, I understand. But individual investors can take advantage of such opportunities. That's what I'm trying to tell. Now, Arvind Infra, we never bought in PMS. It's a very small market cap company. And it was my personal thing. This tweet, the purpose of my tweet was only to teach the small newcomers in the market, how to pick stocks. I was giving an example, and I tweeted it at the price of around 30, 32 rupees 3 weeks back, and now it's I think 78, 80 rupees.
Three more names coming your way, Porinju. It's all about stocks today. Sobha, Wockhardt, Tata Global Beverages.
You are all picking from the tweets. Okay. Tata Global has been my stock. I recommended, I suggested this stock for value investors 1 month ago on NDTV Profit. The stock price was some 116 rupees last time we talked. This is something like 7,000-8,000 crores of market cap. I believe it's a great story. Now the CCD public issue is coming. I think the valuation is amazing. I don't know exactly what valuation it is. They have got debt also. So, the Starbucks joint venture, 50-50 joint venture with the Starbucks, I think it's a great value in the future. Perhaps today's enterprise value of Tata Global can equal to the value of the 50% joint venture in this Starbucks in the future, maybe after 1 year or 2 years. So it's a deep value. And one thing I was really surprised, Tata Global Beverages, a lot of highly respected names in the market, the value investors, especially individuals, very smart guys. They have been all buying the last 2 years, 3 years, and some of them have had that vision 5 years ago. And this stock is a major underperformer among Tata Group companies, and in that FMCG segment, I would say this is an FMCG company in my opinion, because 90% of their products are branded. And but the valuation today is as bad as a commodity company. So I find great value. The stock may be around 130 today. This has a potential to go to maybe 150, 200, and all depends how it evolves. This can be multi-bagger if you have the patience and holding the stock. Not for trading. I don't know about trading. I'm talking about long-term investors. And the other stock, what you mentioned was, I think,
Wockhardt has come up a little bit, but there is the FDA issue there, and then there's Sobha as well.
These all are great businesses, There can be temporary issues. Wockhardt was my great wealth creator in my portfolio management. We bought it to 120, 30 levels, and it went to 2,200 after we bought in a short period of time, and the markets were maybe up by some 10-15% during that period. Again, it came down to 350, 400 levels. Now, a lot of people have been buying it. I think it's around 15,000 crores of market cap. I think it has more of the last few days. I'm not recommending the stock at this point of time. But I tweeted, when it came down a couple of weeks ago, and for that same USFDA issues or whatever. And the pharmaceutical business was in the limelight in the stock market. but people are very skeptical. You cannot blame them. Very skeptical about bad news, because some companies have gone down to any unimaginable kind of prices because of bad news, and this has happened mostly in leveraged, highly leveraged companies. Whereas Wockhardt is not into that high leverage or kind of things. They had issues with the US FDA. In case, it was a question I tweeted, whether, because I feel like, there are many things happening, many developments. It gives some indication that the problems with the FDA may be getting solved very soon. So on that basis, I was asking a question, whether FDA woes are getting over. Of course, stock is up by some 300, 400 rupees up to that. I have no comments at this price. I'm just, I was giving a point to ponder. Yes, Prashant?
Yeah, no, absolutely, absolutely, absolutely. So let's just talk about one more sector which I want to talk about, and then I'll get to what you want to talk about today. Something new, metals and mining, Porinju. I don't think last year on the show in early September we spoke about it. Your cup of tea at all, or no?
I did not like metals and mining for the last many years. We never had an exposure in PMS. Even today, I don't find, because I find much more clarity in some other sectors. So that's why it's always a priority. There are so many companies. I'm managing just around 330, 340 crores. It's a small portfolio manager I am. So I have my limitations. I need not expose to all the kind of industries and companies. And we typically have 8 or 10 stocks in the portfolio. We are very highly concentrated holding what we have. That's why I told yesterday, the NIIT is 17% of our portfolio. Then people ask why 17% of one stock, that also a mid-cap stock in portfolio. Some people may call it was small cap when I bought it. Now it is becoming mid-cap, and it can become a large cap eventually. So that is how we have to have the conviction. And this high exposure and all, it shows the level of conviction in certain companies, and it doesn't happen very often. So when you have a high conviction on a business model, on a company, with regard to the future wealth creation, why not? I don't mind exposing to 15-20% to a single company. It's fair. It should be fairly large business. People may see, because of the market rationality, a stock may be small cap today. But if I see it becoming a mid cap and a large mid cap after 2, 3, 4 years, why not? So that is where you make wealth. That is why perhaps I'm so feeling good. That we could create around over 33% CAGR in the last 12 years after all the fees and expenses, and almost tax free for the clients who have completed 12 years in our portfolio management system. Now this I am just telling not to take the credit of that. What I am trying to tell you, Prashant, India offers tremendous opportunity for stock picking, and it is all about stock picking. If people waste their time talking about US Fed rate and China and Nifty, this may not be possible. You have to think beyond all those things. You are owning a business. You are buying ownership in a company. What they have got to do with the US Fed rate hike, or what they have to do with Nifty, what they have to do with the Chinese yuan. You have to analyze it from that perspective about the prospects of that company going forward next 2, 3, 5 years time. That is called stock picking.
You'll put a lot of people out of jobs with talk like that. But anyway, only half kidding there, by the way. Only half. Let's just 2 more things. DLF and Anantraj, which we discussed, not I think the last time, but the time before that you were on the show. Now DLF has come to about 135 or so, and Anantraj still lacking interest. Your conviction interest still intact there?
Yes, but it has failed to move up to my expectation, I have to admit, definitely. But one good thing, I have identified these stocks at very low levels, especially DLF. I looked first time at DLF when it came down below 110 rupees. And even today, after all this, so much added negatives to the segment and to these companies, it is still at 130, 35, it's something good. So it has potential, Prashant. I am looking at, real estate segment in India. One thing we all have to look at, the price of real estate, the properties, the land, the built-up areas, they have to decline. Over a period of last 1 decade, especially in the cities, in the urban areas, the price of real estate properties has really shot up to an unsustainable level and to an unaffordable level. And people who had money, a lot of them who don't want to expose to financial assets, they went on buying 1 flat, 2 flat, 3 flats. Some of them accumulated land, and it has created a social evil also. You know, when the rich people accumulate all the land available in the country, then the poor people will suffer, the middle class will suffer. To make a house, it will become unaffordable. To live in a city, it become unaffordable. So it has got two aspects. One is the social aspect. I am very bearish. I never invested in real estate property in my life, just because of that. I have real estate, means I have a small farm in my hometown. I do every square inch of my land. I utilize that. I do my farming, and I have some other few birds and animals. So I am fine with that. So, but here, what I am talking about, not owning land or things. People buy land, then once they buy the land, it has become useless land. They don't utilize the land. It is kept as an investment. I seriously feel government should regulate investing in real estate. This is for the social, better social prospects. Anyway, now coming back.
Just to go back to DLF and Anantraj, you're saying we should. That's not. You're not trying to bet on those anymore, or are you still hopeful? These should do well over a period of time.
These companies are sitting on tremendous amount of land parcel, and built-up area, and it is much more than today's enterprise value. And even if and as I told earlier, the real estate prices should go down by 10, 20, 30% in the coming years. That's what I think most people are agreeing to that point. And at that level, we will see action. There will be a lot of transactions happening, become more affordable. And so that, these companies, even at that 30% below today's current market price of real estate properties, these companies, they are worth much more than today's market price. And the business model. Now DLF has got a business model that also has got a value. It has got a future in this country. And the new themes are emerging, like budget apartments or the low-cost housing, and that is the focus of the government going to be, which is more important for the nation. So all those things are going to create values for many of these real estate companies, and this is not something to write off. But at the same time, one should be selective. Some of those companies are over-leveraged. They can get into problem. I don't know. I can't. If you are not sure about the survival of those companies, please avoid such stocks.
Okay, fair enough. Let's come to a segment called EPC, right? Engineering, Procurement, Construction. And we were discussing earlier offline that you find that space interesting. Just define what's the opportunity broadly there, top down, and then maybe we can discuss a few names.
See, there is already indication, that government is going very serious about spending on infrastructure, and already the bids are there. A lot of people are bidding. People are talking about L1, L2. It has become talk of the town the last 2 days. I have been sensing it last couple of months, and I think don't underestimate the Modi and the present government. I think they have got some longer-term plans with regard to these things. And one reason the crude oil price has come down so much, it's not fully passed on to the customers, the consumers. It makes some sense. Maybe government is hoarding that kind of money, by way of excess duty and all. They have increased the cost for this, and it makes sense, because the crude price can come up again. So government, by doing it, they are avoiding that wild swings in the consumer price. So, and at the same time, there is a lot of money I feel government is hoarding for the infrastructure projects, and India need it. It is a need of the hour, and water-related, water distribution, sewage, and the bridges, roads, and EPC segment is going to have a very big boost in the coming months and coming years. And this opportunity is very special to India, and companies in India, the EPC companies in India with execution capabilities and keeping a reasonably good balance sheet. I won't say it's a debt-free balance sheet and all. Reasonably good balance sheet, execution capabilities, and companies listed in the listed space. I think these companies can be multi-baggers, some of them, and some heavyweights can give you 30-40% kind of yearly return for next 2-3 years. So that's a big opportunity for smart investors. And one stock we have been buying, which is already everybody knows, Home Metals Infrastructure. It's not a metal company. They have some real estate business, but mostly the management in the public has been talking about their focus on EPC, and they have been bidding aggressively of late. And the company is almost it's a debt-free company, and they have got some road projects, and they have entered into the oil and gas segment in a big way. So this is something I found because cute company, and it was around 300 crores market cap. Now it has come to 550 crores or something. There could be a lot of opportunities like Ashoka Buildcon, Simplex Concrete, there's Pradhiva Industries, a lot of them, and Jay Kumar. I don't know about IRB. IRB also is a great company. So don't look at these names. I think today Indians have got a huge, big menu of EPC companies, and make sure these companies are going to survive from the balance sheet. And then there are a lot of good companies also with very less debt, manageable kind of debt. The Simplex and all looks like a blue chip company. No need of rushing to buy these stocks now. I think they have moved in the last 2-3 days in some, some of them 10-15%. So, and it's not going to run away anywhere. But analyze this industry scenario, analyze the companies you like, and I think EPC is the best opportunity today for a value picker.
Right. Simplex, you mean Simplex infrastructure? Simplex projects. I mean, you mean the 300 rupees name? Yeah,
it's around 300 rupees, around that. It's 1,400 crores market cap. They have got a debt of around 3,000 crores plus. But I think it's a very quite large company with execution capabilities. And look at this, these companies, you should watch the order flows coming in, how they are bidding, and how the balance sheet takes shape going forward. So that's something very interesting. A lot of people, the so-called fancied investors in the country, the big value investors, philosophers, they're trying to avoid these kind of stocks. They have been always into talking about the blue chips with great management and moat. But here there are great EPC companies with a margin of safety. This margin of safety is very important.
Yeah. So out of these, where for our viewers, because a lot of the, I mean, it's not just the last couple of weeks, but they've recently they've been decently bid up quite well over the last year and a half or so. I mean, actually the market is up quite a bit from late 2013, but some of these stocks are up, 5 times, 10 times from those lows. Out of these, where do you see the maximum value in absolute terms? Out of these names.
Yeah, these stocks have really shot up after that Modi Modi government has been formed, and even before that on expectation. And they have corrected also recently well. If you see the last 2-3 months, I think many of these stocks have corrected 20, 30, 40%. So that's why there is more margin of safety in many of those companies. I don't want to tell any specific name, because if I like it so much and I tell the name, I might have already bought it recently. That doesn't look good for recommending the stock. So I think a lot of them investors can explore themselves and get the help of his friends, neighbor, to really identify.
and some help from you as well, Porinju. But so you bought Home Metals, right? Recently.
That's right. Not recently. I've been buying it last 5-6 months.
What about the others? Simplex and Pratibha and others? Jay Kumar?
Simplex looks very interesting at this point of time, but not as a big multi-bagger. It's already a big company. So it can be a very safe bet, it looks like. I'm not holding the stock because it is too good for me to own.
Okay, all right. What about power EPC companies? Power related, because that is one area where there is a lot of talk of reform and fixing the state electricity boards, more orders being handed out and things like that. So I'm talking about, Techno, Kalpatru, KNR, KEC, Jyoti Structures, the power EPC guys.
Yeah, KNR is into road construction basically. That's a very good company. They are not into power, of course. KNR, I had even tweeted at 100 rupees some time back. Because it was a great EPC company without debt. You know, there were sometimes small companies in the EPC segment. It was available without debt. There are still companies, but you know, telling very small names on television, you know, doesn't make much sense. People won't benefit with that. So let them explore and find and buy. The smarter guys will make all the money. And the power companies generally, I think even the the government is doing a lot of things. It's a very tough, it's a very challenging thing to revive the power sector, especially because of the involvement of the state government electricity boards, and they are deeply into it. And I think there will be a major restructuring is required, in which lakhs of crores have to be pumped. Who will pump the money? I don't know. The banks, the SEBs, the government. I think all of them should sit together and take a cut once. You know, everybody should suffer to the tune of maybe 1 lakh, 2 lakh crores. Then only this problem can be solved. I'm not an expert in these things, but that's what from a common man's point of view, I feel government will come out with some schemes, some haircut, and once normalize the power sector, and the power producers, the distributors, the state electricity boards, banks. Actually, banks are a very integral part of power production in India. I don't know if you're aware about this. Because all the money lent by the banks, a lot of that money is in that sector. So there will be big, it's a very complicated thing. So that's why I tend to avoid the power sector with the available visibility as on today.
Yeah, okay, fair enough. And also, I mean, you know, most people don't have unlimited amounts of money, so you got to prioritize, as you said earlier, and so that's important as well. That's what you got to do. Porinju, thank you very much. Great speaking with you. Really great to have you on the show. Thanks indeed.
Thank you.
Appreciate it.